US dollar price. However, what a lot of countries will do is they will convert that price to their local currency and they'll trade based on that. But of course, as the spot price of gold fluctuates, their currency is fluctuating as well, so it can be slightly different. And in fact, last year, why that's important is last year many currencies saw the price of gold in their currency either at or near all-time highs, whereas in the US price it was not near all-time highs. Right. So the currency, their conversion to their currency, they'll trade in that, and that can have an impact on what they're paying as well.
Right. And what are the main factors that influence that price of gold or silver?
Well, the price during the day is basically the back and forth, the buying and selling between traders. It'll fluctuate based on various things that they're doing, whether it be from technical trading or all the way up to some sort of major economic issue. Mm-hmm. So it varies throughout the day, but it's based on many factors. It could be from something small that someone is buying and selling for some event that happened that day, or it could be a major economic concern, such as maybe an impending recession, and so they're piling more into gold. So a lot of different factors will play into that price of gold throughout the day and throughout the year.
So when you talk about traders, I imagine those traders are representing different segments or groups of people, an industry, maybe the government. What are some of those segments? Can you tell us a little bit more?
So the big players, first of all, would be central banks. Central banks have been net buyers of gold for 10 years now. They will have an impact on the price of gold. They've been buying, so that's been a supportive factor for the price of gold. They will usually trade either with each other directly, or sometimes they'll go through large commercial banks. So when you look at the Commitment of Traders report, as we call it, and people can follow that if they want, it comes out once a week, you can see the large commercial traders and what they're doing, they're buying and selling. And that's usually large banks, large commercial banks that are buying and selling. Mm-hmm. And then the big factor recently, though, has been more of the hedge funds, the non-commercial traders, the hedge funds that are buying and selling gold. They've been net buyers a lot recently. Mm-hmm. Back in 2016, for example, they were buying a lot more gold than they were selling because of the rise in negative interest rates. Last year it was because of the trade war between Trump and China. There were concerns there about economic growth, so the hedge funds were buying more gold than they were selling. Mm-hmm. This year, recently, it's been the coronavirus that's been driving some of the price. That hasn't had as big an impact as some of the other issues, but that's what's been going, and that's what's been driving the price. And it's been those hedge funds, the large funds, the non-commercial traders, that have been driving the price more recently.
Okay. And what about, I call them, I refer to them as kind of Main Street or mom and pop investors. I think of my parents, for example, myself included, yourself included. What about private individuals like us? Who is representing us? Is that its own segment, or do we fall into the same hedge fund segment where these larger trades or these trades are being grouped together and then placed into the market?
It depends on where you're buying from and who you're buying through. So if you're buying from a dealer will be packaged all together. All the dealers will be packaged usually together in a big purchase order. If it's all coming in at the same time, a lot of those buy orders will go in together, and that could drive the price either up or down if there's more buyers than sellers, or vice versa. So retail demand, whether it's a paper product or a physical product, can drive the price. They're usually grouped together, depending on who you're buying from.
So I wanted to ask you if you could give us an idea of the size of the gold and silver market, because obviously these commodities have played an important role in history, especially gold. I mean, it's just a pillar of economics. It was money for the longest time. People used to, when they built the railroads, I mean, people were being paid in $20 gold pieces, $10 gold pieces, $5 gold pieces. It's not money anymore, but it's still part of the conversation. So is it like a really big market, or is it actually a lot smaller than some people might realize?
It's a very small market, smaller I think than people realize, but I would say gold is money. It's not currency. Right. So it doesn't fluctuate around or float around the markets as currency, but it is money. In fact, it's the best form of money in my opinion, because it's a long-term store of value as history has shown over thousands of years.
So in terms of actual size, can you give us a comparison, a draw comparison with another asset class?
Yes. I love this question because it just shows how small the gold and silver markets are. Gold, for example, if you took all the the registered gold stock at the COMEX that's eligible for delivery, that can be taken for delivery, that's classified as such, Warren Buffett and his fund, Berkshire Hathaway, has, I think the latest figure was something like 121 billion in cash. Could be a little higher or lower, don't quote me on that, but it was an awful lot of cash. Well, if you multiplied all the registered gold at the COMEX by the current price of gold, Berkshire Hathaway could buy every single ounce of registered gold on the COMEX with 1% of his cash. So that just shows you how small this market really is. Gold's very liquid. It trades around the world on every major exchange, but it's a very small market when it comes to the size of other markets. And the point there is, of course, if we get some type of crisis or recession or stock market crash, anything at all that would drive people into gold more, that demand can easily influence the price because it's such a small market.
And circling back to central banks for a second, we talked about them a little bit earlier. If gold is such a small market, and some people who aren't, gold bugs or believers in gold might say it's inconsequential almost, why is it that central banks, such important institutions in our society, rely on gold to protect their population? What is it about yellow metal that makes central banks buy so much of it?
I think that goes back to what we were saying earlier. Money is the best long-term store of value. It's why everyone from kings to pirates were hoarding metal back in the day. It has the same relevance and same significance and same importance to finances today, and central banks do hold gold in their reserves. It's a reserve asset in case they need it. It's reserved for them in case something happens to their currency or something happens to their economy or their markets. They have gold because it'll hold its value. They have gold that they can use to support their economy or the markets if they need it. And they don't hold any other metal, by the way. So they hold gold in their reserves, but they don't hold silver, they don't hold platinum, they don't hold palladium. These are all other precious metals, but gold's the only one that they hold.
So a store of value. And for a retail investor, for the average person who, probably owns their home, they have some equity or have some money in the equities markets, does it play a similar role for that person as well?
That's a great question. Gold has been demonstrated to be an excellent hedge. So it's a fear metal, let's face it. When fear rises, when uncertainty grows, that's when people turn to gold, and that's when gold tends to do its best, right? There are times where it can be an offensive asset, it can make you money, but most of the time it's a defensive asset. So it's a great hedge. So if the stock market does decline, or we do go into a recession, or there's some other major geopolitical event, you name it, gold tends to do well in those environments, and that's why it can be an excellent hedge for people to own. You can go ahead and be long stocks, but when you hold gold, you're hedged against a stock market decline. That's why it can be such an advantageous metal to hold.
Right, and let's talk a little bit about silver. I know you like silver, you talk a lot about silver in your newsletter. What is it about gold's little brother, we'll call it, that you like? What makes it so attractive, and why should people consider owning some?
I like silver. It is more volatile. It's an even smaller market than the gold market. So it tends to be more volatile in price. The advantage there is that if we're in a bull market for precious metals, silver will tend to rise more than gold. In fact, in every major bull market in the last 50 years of precious metals, silver has eventually outperformed gold. It doesn't necessarily start out outperforming gold. It tends to catch up and pass it as the bull market goes on. So you can actually make more money in silver if your timing is good, if you're buying at the beginning of a bull market and holding it through that with silver. The issue with silver, of course, is that it takes more space to store it. It takes a lot more. You and I could hold $50,000 worth of gold here in the vault in the palm of our hand, but to hold $50,000 worth of silver would take something like a dozen different shoe boxes and would weigh like 190 pounds. So storage is an issue with silver, and that's why using SWP to store some silver is a great idea. Now, the reverse also works, the volatility. So in a bear market or in a declining market, silver will fall more than gold. And gold tends to hedge stock market crashes and recessions more than silver does.
Right.
Silver is more, tends to respond more to monetary or currency concerns like inflation and things like that. So, for me, I like to own both.
Right, and that was my next question. If you're just getting started out in precious metals, let's say you had $10,000 to invest, would you be investing only in gold or silver, or would you consider mixing up the portfolio a little bit?
I would definitely own both because they can serve different purposes. Gold's the ultimate backstop. It is money, it's the last man standing, so I would definitely own some gold. I would own some silver too if you think some type of monetary issue is ahead, because silver will tend to outperform it in that environment. So I like to own both. I wouldn't own just one. I don't think you should put all your eggs in one metal.
Right.
So I think you would own them for different reasons, and it would be great to own both. That's what I do.
Now, what about the platinum group metal family? A lot of people don't even know that they can buy platinum in the shape of bars and coins. And then you have palladium and rhodium, which most people haven't even heard of. What's your feeling about these metals? Palladium and rhodium are actually the two most valuable precious metals. I mean, palladium has surpassed gold, which had never happened until recently, and it's flown right by it. Are we in a bubble for these two metals? Would you recommend buying them right now, or would you say maybe it's time to be selling them if you are holding
The
them?
reason palladium is rising so much in price is because of a supply issue. It's strictly a supply issue. Demand is increasing because of electric cars and things like that and other uses, but it's really been a supply issue that's driving the price of palladium. Based on the things I read, I don't think the supply issues are going to resolve real soon, like in 2020, but eventually they're going to. And let's be honest, the price of palladium has gone parabolic.
Right.
It's I think doubled roughly in the last, just since last summer. That's an awful big rise for the price of a metal. So I would be very cautious to buy palladium now. I'm not saying it's going to fall tomorrow. I just think it has gone parabolic. You're buying high, could go higher, but we don't know. I don't know that it's necessarily the most prudent thing to buy after something's risen so much.
Right.
Platinum's probably a better buy right now. It's up as well, maybe 20% or something in the same time frame. That use is probably not going to go away. But let's keep in mind, both of those metals are industrial metals. They're driven by industry. 90% of their use goes to industrial uses, mostly catalytic converters. So if you think we're going to go into some kind of economic slowdown or a recession, something like that, those metals will be impacted because demand will fall.
So Jeff, I'd like to play a little game with you called Would You Rather. There's no wrong answers. I'm going to throw out two words and you just go with your gut and tell us which you'd rather, okay?
Okay.
Gold or silver?
I would rather hold gold for the long term, but silver's more undervalued at present. The gold-silver ratio is almost at 90 back again, so that clearly shows silver's more undervalued. So there's probably better value with silver right now than with gold.
So I'm hearing silver. Okay, platinum or palladium?
I would go with platinum because it's, again, more undervalued than palladium. Palladium's risen a lot. It's been in a almost parabolic rise. I'm going to get better value with platinum right now.
Okay. Stepping outside of your comfort zone, maybe a little bit now. Oil or natural gas?
Oh boy, that is outside of my knowledge base, but I'd probably say natural gas because it's cleaner.
Okay. And an environmentalist, you are from California after all, so it makes a lot of sense. US dollar or pound sterling?
Oh boy. I mean, I think there's probably going to be some type of crisis in the near future. So investors will flee to the dollar, to the treasuries and bonds and that sort of thing first. That'll probably drive up the dollar price. So I would probably start there, but I'm not going to hold it forever. That's my caveat.
All right, we'll let you off the hook. Good answers. Finally, Jeff, I wanted to ask you, you've been around gold and silver a long time. You have children of your own. I'm sure you've advised people of all ages. Precious metals isn't only for older, wealthy people. I think that's something that SWP does try to drive home. We think young people should own precious metals. So if you had to give a young investor some advice about owning precious metals, what would it be?
I would say, first of all, you do want to own some, even though